Welcome to the channel Get Rich. Today the video we are going to look into is top 3 small and mid cap stocks to buy now. So this includes 2 pharmaceutical companies and 1 battery company. So let's get started. So the first company is Granules India Limited. So the first time I introduced Granules India Limited in this channel is around the price is around 150 rupees. I think it's in March 2020. So now the price is almost sitting around 320 rupees. I also added Granules India Limited in the previous top 5 small cap stocks to buy. At that time the price was around 200 to 220 rupees, and currently it is sitting at around 320 rupees. It shot up until 420 or 430 rupees, and currently it had a pullback, and currently it is trading at around 320 rupees. And I think this still has room to grow, and I expect at least 100% return from this stock over the next coming years. So first, the market cap of Granules India Limited currently is 8,326 crores, and it has a PE ratio of 17.6, and the price to book value of this stock is 4.36, and it has a dividend yield of 0.3%, and debt to equity is quite moderate, it's 0.4, and ROC is quite good, 17.2%, and return on equity is 18.7%, and return on asset is around 12%, and their sales growth in the past 3 years is around 23%, very good solid growth. And if you look at the profit growth, it's also 24% for the past 3 years, and also they are constantly increasing their operating margin. So currently their operating margin stands at 25%, and if you look at the promoter holding, it's around 42.4. Let's look at their quarter highlights. So they did a 4 new launches such as Ramalton dexmethylphenidate and HAER and potassium chloride ER tablets from GPI, and guanfacine ER tablets from GIL. So they also had US FDA approval for penicillin capsules 250 milligram and potassium chloride ER tablets manufactured via multi-unit pellet system technology. And they are also focused on R&D investments, and their R&D spend is around 223 million rupees. And they also received 2 ANDA approvals during this quarter, and they have total of 35 ANDA approvals from US FDA. So during the quarter, they acquired land in Genome Valley for the construction of a PFI and FD manufacturing facility for 10 billion units of solid orals, other finished dosage forms, and additional capacity for PFIs. The facility will be operational in early financial 24. So they are growing at 23-24%, and they are still planning ahead for their next leg of their growth. So they are consistently growing. So this company is a growth company and very good growth company. So I think this has a very huge potential in the coming years. So also they are expecting 400 crores of capex to be incurred over the next 3 years. They are laying foundation for their future growth. And then if you look at their revenues quarter over quarter, in quarter 3 financial 2020 it was around 704 crores, and quarter 3 financial 2021 it's 844 crores. It's almost 20% growth. And if you look at the gross profit and gross profit margin, it increased from 356 crores to 453 crores in quarter 3 financial 2020 to quarter 3 financial 2021, and it is growing at 27% quarter over quarter. And if you look at their EBITDA and EBITDA margin, EBITDA growth was 29.7% from 163 crores to 211 crores, and their EBITDA margin also increased from 23.2% to 25.1%. So they are consistently increasing their EBITDA margin. That's good news. And also they have PAT, which increased 129% quarter over quarter. Last quarter their PAT was 64 crores, and this quarter their PAT was 146 crores. Look at the growth, 129%. And their profit margin increased from 9.1% to 17.4%. Also their net debt decreased from 788 crores to 612 crores. They are also decreasing their debt. That's also good news. And their ROC increased from 22% to 32.4% quarter over quarter. So all their metrics are pretty good. And if you look at their revenue for the past 5 quarters, they're consistently increasing 700 crores and 735, 858, 844, and 1 quarter that is due to corona, I think 600 crores, but currently they are doing around 844 crores per quarter. And if you look at the profit after tax, it was increasing from 64 crores in quarter 3 financial 2020 to 92 crores to 111 crores to 163 crores, and last quarter 146 crores. So look at the growth. They are consistently growing their PAT. So also if you look at their segments like finished dosage or PFI segments, almost 50% is coming from their FD, and 20% coming from their PFI segment, and 29.8% is coming from their API segment. So if you look at their previous years, how they are growing at the revenue at the CAGR of 17%, and their gross profit is growing at around 19%, and their EBITDA growing at around 17%. Look at their profit after tax. They are growing at a CAGR of 29%. They're consistently increasing their margins. So they are a very good growth company. I like this company so much. I bought this share around 70. I started accumulating from 70 rupees to 100 rupees, and currently it's sitting around 320 rupees. It went up to 420 and it came down to 320. I did not take any profits from this share. I am still buying in this dip. So this company has very huge potential going ahead. If you look at their other financial metrics like net debt to EBITDA, it decreased from 1.4 to 0.7, and their ROE is increasing, and they are increasing their free cash flow, and their ROC is increasing from 22.7% to 32.4%, and their R&D, they are doing pretty R&D percentage of sales, they are doing like around 3.2% in quarter 3 financial 2020, and currently it's around 2.6%, and their cash to cash cycle is increased a bit, but that's still fine, I think. And then if you look at their geographical expansion or their diversification of geography, so in financial 2020, 51% of their revenue coming from USA, and then Europe 20%, and financial 2021, 50% revenue coming from USA and 23% Europe. Already they are improving in Europe. And financial 2023, they are expecting 43% revenue from USA and 28% revenue from Europe. So they are also strengthening their Europe geography. That's also a good thing. They are diversifying a bit. So then also if you look at their new products, so they have like OTC and RX. So of course every pharmaceutical companies can have. OTC is nothing but over the counter. So in order to buy these medicines, we don't require any prescription, but RX, this is prescription only drugs. So for example, in order to buy that medicines, you have to have a prescription. So they are having 64% OTC, and prescription only is 36% in financial 2020, and they added 17 new products in financial 2021, and it OTC reduced to 29% and prescription only increased 71%. The total number of products is 33, and financial 2023 they are expecting to add 23 new products, and their number of products is increasing to 56, and their OTC is going to reduce to 15%, and prescription only is going to increase to 85%. Also, if you look at the dosage form, they are also expanding, or they are also diversifying into other segments. Also, then if you look at their shareholding, so they're consistently, they have same shareholding for the promoters, and their pledge was almost 44% and then 37%, and currently the pledge is sitting around 8.6%. Still pledging is bad, but they have decreased their pledging. And look at the FII holding, it increased from 9.7% in December 2018, and it increased to 26.4% in December 2020. FIIs are buying, and mutual funds, they don't have much allocation in Granules India, but FIIs are still buying this company. So that's a very, very good thing for Granules India Limited. And also if you look at their price, as I said, it increased from 70 100. I started buying around these values like 70 to 100, and it was a quite a good ride. So it went until 420 rupees, and then now it has a dip at around 320 rupees, and it's still looking pretty good as according to me, because we'll just see their profit and their metric in a minute, but their growth is pretty huge. They can sustain this price increase. I am still believing this company is undervalued at 320 rupees. Because of this dip, it provided opportunity for us to accumulate more. I am buying this dip for this company. And then if you're having a look at their PE value, so usually their PE value were like average PE was around 12 or 13, but it had a swing, so it went up to 30 and came down to almost 8 PE, and then again 30, and currently it's sitting around 17 PE. I think their PE can go to 30 because they are growing pretty huge, and they are reducing their debt. They have all their financial metrics very, very good. So I like this company. They have very good growth, consistent growth, so that's very good for the company. So if you look at their quarter over quarter growth, for example, their net profit was in March 2020, it was around 92 crores, June 2020, 111 crores, September 2020, 164 crores, December 2020, 147 crores. Look at their profit margin expansion. So it was increasing from 20%, 21, 23, and 25, now 30 in one quarter and 25. They are also increasing their profit margin, and also their profit is increasing. They are almost sitting around 150 crores per quarter, so that means they can easily do 600 crores per year. So if you look at the past year, March 2020, they just did 335 crores, but they can easily do 600 crores in next year or the coming years. So if you look at the 600 crores value, and then if you put 30 PE, because they are growing pretty good, we can put 30 PE for sure. It can reach 30 PE at some point. So 600 crores and 30 PE, it will result in 18,000 crores market cap. So the current market cap is sitting around 8,300 crores. It can easily reach 18,000 crores in the coming years. So I think it has a very good potential. It can do 100% return. I think it's a very good opportunity to add this company. If it falls more, I am buying more. I am pretty much interested in this company, and I am already holding this share. As I said, disclosure, this is not any financial advice. This is my personal opinion. I bought this shares, I am holding to it. If you have to do your due diligence before buying any stock. Let's have a look at the second stock, which is Ajanta Pharma Limited. So the Ajanta Pharma Limited has a market cap of 15,616 crores. It has a PE ratio of 25, a bit expensive, but still it's good. And the price to book value is 5.36, and dividend yield is 0.72%, and they have debt to equity of 0.01. And they also have ROCE of 27.6%, very good. And then their return on equity is 19.4%, very good. And their return on asset is 18.9%, and then their sales growth is 9% for the past 3 years. That's a bit concerning. And also their profit growth was -3% over the past 3 years. That's also a bit concerning. And also their operating margin is 35%, and their promoter holding is 70%. Why am I suggesting a stock which is their profit growth is -3%? So I feel they are started growing from this year. So I will just explain the growth of the company. So let's have a look at quarter over quarter what they did. In quarter 3 financial 2020, they have a PAT of 108 crores, and quarter 3 financial 2021 they have 176 crores. Look at the growth, 64% quarter over quarter. And if you also look at their quarter over quarter, India export total sales, they are increasing 13, 17 and 16%. So their growth is coming back. Also, if we look at their 9 month from financial 2020 and financial 2021, 9 month financial 2020, their profit after tax was 339 crores, and 9 month financial 2021 was 495 crores, with a growth of 46% growth 9 months from previous year to this year. Also, if you look at 9 months for export and total sales, it was around 16% and 11%. After a bit of consolidation, they started growing again. Then if you look at their total income over the year, so it was 1,700 crores in 2016, and then it was around 2,680 crores in 2020. Look at the growth. It was just consolidating over the years, and then again it started growing. And if you look at the PAT, it was around 416 crores in 2016 and still 468 crores in 2020. And I feel they can grow more in the coming years. They can increase their PAT in the coming years. That's because of the margin. I will come to that in a bit. If you have a look at their EBITDA margin, it was consistently decreasing from 34% to 31% to 27% to 26%. That's the problem. Their EBITDA margin is decreasing, and also their PAT margin, it's also decreasing from 24% to 22% to 19% to 18%. And also if you look at the EPS, it's increasing, but still it's not that much. Also if you look at their dividend, they are consistently having a dividend payout 18%, 25%, 47% and 25%. And their ROC is also decreasing. If you look at their profit margin, it is decreasing. That's why this share is stagnant for some years, and I feel it's again started growing. I will explain that in the valuation section. So if you look at their R&D spend, it was 6% in financial 2016, and it increased to 9% financial 2019, and in 2020 it was around 6% again. And they have 42 approvals in total, and 9 in 9 month financial 2021, and they have under approval 18, and filing target so 10 to 12. So 2 filed in 9 month financial 2021. It's less due to COVID. And also they have 36 products on shelf, 3 products launched in quarter 3 financial 2021. So it's also a very good company. Let's have a look at their shareholding. So the promoter is holding almost the same, and if you look at the FOI, it's also pretty much, it was decreased a bit, but it's not that much. And also if you look at the DII, it's also, they are also increasing bit by bit. Let's have a look at the price. So it reached the price of almost 2000 in around March 2017. Almost around March 2017 it reached the peak of 2000, and the stock was in the downtrend. Then now it started picking momentum, and it's almost challenging their 2000. So currently it's trading around 1800 rupees. So if you look at their PE chart, so the PE of Ajanta Pharma, once upon a time it reached almost 45 PE, and then it started down, and almost it went down to 18 PE. Even in the downturn it reached only 18 PE. Their average PE is almost 22. Currently it's sitting around the PE of 25. So let's look at their quarter over quarter growth. If you look at their net profit, they were doing around 115 crores in June 2019, and September 2019 115 crores, and 108 crores, 129 crores in March 2020. Look at June 2020, their net profit was 150 crores. September 2020 170 crores, December 2020 177 crores. Why is that happening? Look at their operating margin. So their operating margin was decreasing, like 31 34 to 31 to 22 and 25 28 and 28 and 22. And look at, from June 2020 their operating margin started increasing. It was 33%, 38% and 32%. Also their sales are increasing, so it resulted in a huge net profit. So they are going to report a huge net profit, because each quarter they are doing 170 crores, so they can easily reach 680 crores profit in a year, because currently they are doing at around 170 crores per quarter. So if you look at their year over year, so they were doing at around 400 crores in March 2016, and 507 crores was March 2017, and then their net profit decreased to 469, 387. So what happened to the price chart? The price peaked at March 2017, almost around March 2017, at 507 crores, and then their profit is decreasing and profit is decreasing. Then their share price also decreasing. So now their highest net profit was around 507 crores in March 2017, and March 2020 it was around 468 crores. Currently they are doing 170 crores per quarter, which means it's 680 crores profit in a year. Maybe in next year, in financial 2021, they might do 600 crores or something. In the coming years they can easily do 680, 700 crores. If you look at 680 crores profit they can do in a year. And then once upon a time the P was around 45. So if people see growth, the P can go to that level again. For example, if we take 680 crores as profit, and if P reaches to 40, so it will reach 28,000 crores market cap. So the current market cap is 15,616 crores. It can reach to 28,000 crores, almost a double, 100%. So the stock can do 100% in the coming years, because their growth is coming back and the price is going to rise, because the growth is coming back and people are going to realize it's going to report higher profit, and then their share price is going to go up. I don't own this share, so I am looking to add this share. If the price drops down, I am adding more. So I think I will buy this stock. So I am more and more convinced of Ajanta Pharma. Disclosure: I am not a financial advisor. It's not any financial advice. This is my personal opinion. You have to do your due diligence before investing in stock. So then let's look at the third stock, which is Exide Industries Limited, which is a mid cap. So let's look at their market cap. So their market cap is almost 17,965 crores, and their P ratio is 25, and their price to book value is 2.64, and then their dividend yield is 1.94, and their debt to equity is 0.07, and their ROCE is 17%, and then their return on equity is 12.3%, and ROA is 3.86%, and their sales growth was 9% over the past 3 years, and their profit growth was almost past 3 years was -1%, and their operating margin was around 11%, and their promoter holding is 45.99%. So if you all look at their revenue share by geography, so their domestic revenue is 93%, and the export is 7%, and the revenue share by business, so institutional sales is 30% and non-institutional sales is 70%. Their key application areas are automotive batteries, industrial batteries, and submarine batteries. So they are operating in a battery space. Let's have a look at their market leadership in across different segments. So they have almost 73% in automobile, and 26% in industrial, and 1% submarine. So out of the 73%, which is the main business for them, automotive, so for the OEM 4-wheeler they are the market leader, OEM 2-wheeler they are the market leader, trade 4-wheeler market leader, 2-wheeler market leader, inverter batteries market leader. So in the exports they are number 2 Indian exporter of automotive batteries. In the industrial, for power, solar, railways, they are the market leader, and then telecom they are number 2, UPS projects, traction export they are the market leader, submarine they are the market leader. So they are the number 1 player in most of the segments. Then if you all look at their automotive, so they have like 4-wheeler batteries, 3-wheeler batteries, 2-wheeler batteries, e-rickshaws, home hubs, inverter batteries, and gensets. Look at their customers, the 4-wheeler customers. It's Eker, JCB, MG, John Deere, Fiat, Escorts, Atul, Hyundai, Jeep, Kia, Mahindra, Skoda, Renault, Piaggio, Nissan, Tata, Toyota, Maruti Suzuki, Volkswagen, Honda, Ashok Leyland. So they have most of the companies here. So and then in three wheelers it's Atul, Bajaj, TVS, Force, Mahindra, and two wheeler Hero, Bajaj, Honda, Royal Enfield, Suzuki, Yamaha, TVS, Mahindra. So they have all the customers. Most of the customers of automotive OEM are their customers. Let's have a look at their industrial batteries. So in the industrial batteries, they have like railway segment, and they have telecom batteries, and they have for solar application and power and infrastructure projects, and they have for industrial UPS, mines, and traction. And if you look at their customers, like their MNC customers, they have like Hitachi, Sipla, and they have General Electric, Schneider, ABB, Mitsubishi, so Emerson. So these are their MNC customers, and their domestic customers is Godrej, L&T, Finolex, Tata Steel, NTPC, BHEL. So they have a lot of very high quality customers. So they are also doing a lot of collaborations for technology. So they in immediate short term and ongoing, they have collaboration with Hitachi and Furukawa and Eastpen and Morova Brazil. And in the medium term, so they are also doing a joint venture with Leclanche, Switzerland for lithium ion battery. So lithium ion battery was used for electric vehicle, electric cars. That's very very important. So also in the long term, they are also using ABC collaboration for bipolar batteries. Let's have a look at their net turnover. From financial 2015 to 16, it was around 6,848 crores, and currently they are sitting almost 10,000 crores. And operating profit is increased by 7.4%, and profit before tax is 3.9%. Profit after tax was 7.3% CAGR. Let's have a look at their one important thing: how they are progressing their lithium ion batteries, because they are the market leader in lead acid batteries. But most of the people believe the electric cars, electric vehicles, they need lithium ion batteries. So they are also doing some kind of joint venture with Leclanche. So they have a next charge, which is Exide Leclanche Energy Private Limited. So what is the update of that? So they have they are building this plant. So the most modern and versatile lithium ion pack and module making plant in India. With this, it's a joint venture. So their manufacturing capabilities were divided into several lines: prismatic module line, cylindrical module line, pouch module line, low voltage pack line, high voltage pack line. So here in prismatic line status, so it will be fully commissioned and validated as per said in December 2020. So first bulk order received for 3,000 battery packs for electrical three-wheeler from a large OEM. So the value is 18 crores. So line will also be used for making e-bus and telecom models. Also they have cylindrical line status, so it will be expected to be completed by 30th December. It will be used for making battery models for electric two-wheelers. So the products under testing for many OEMs. And then you have like pouch module line. So it's developed in Switzerland with key controls on safety and process. It's flexible to handle different variants of pouch cell, all station supervised with MES controls. So the pouch line is for making battery models for bus car application. And also the LV line status, their lines commissioned and ready for production. It will be used for making models into pack for all low voltage applications like two-wheeler, three-wheeler, telecom, UPS, etc. And also high voltage line status, it's also commissioned and ready for production. It will be used for making high voltage packs for bus, car, and other high voltage applications. And if you have a look at the capacity summary for all lines, it was around over 1.5 gigawatt hour. So if you look at their lines, so the highest one is cylindrical, and then prismatic is the next one, and then you have LV pack. Also if you look at the capacity in megawatt hour per line, so they are also progressing in lithium ion pack. So that's also a good news. So if you look at their shareholding pattern, so their promoter holds almost the same. And if you look at the FII, so it was around 10.61 in March 2018, and it's almost remained the same. So the FII are slowly buying. So for example in March 9.41, and they are slowly increasing to 10.39. And if you look at the DII, they are also buying. In December 2019 it was 24, and March 23, and then June 22, September 23. Look at in December 27, people are started to buying. And look at the public shareholder decreased from 21 to 16, and FII or DII are increasing their shareholding. That's a very good news. This company is going to grow. So because it is stagnated for some time, it will grow in the coming years, and I am sure the PE will re-rate, and they will be again in the investor radar. If you look at their price, so it reached almost 300 rupees, and then it went down to almost 120 rupees, and currently it's sitting around 220 rupees. So I own Exide Industries, so I bought around 120 to 150. I started accumulating, so it was a very huge value buy at that point of time. so it's still undervalued, I feel. So it's a good price. What is it trading now? It's 200 to 220 rupees. It's a very very good buy. If you look at the PE chart of Exide Industries, it was almost like cyclical one. It shoot up to 30 and come back to 15 and then 30 15. So it was almost a cyclical chart. So it was almost around 35 in almost June 2018, and it went back almost to 12 in March 2020, I think. And then it is currently sitting around P of 25. That is also because they had incurred a loss of in the COVID quarter. So I think in the first quarter of financial 2021, so they just made 11 crores loss. That's because all their plants are shut down. That's why their pay is 25. If we don't take that into account, their P will be much lower. That's what we have to see. We have to see 1 year forward, because that one particular quarter, I will show that in a minute. So then if you look at the quarter over quarter growth, in June 2018 it was around 188 crores, and June 2019 162, and September 2019 248, December 2019 119, March 2020 they are doing around June quarter, June 2020, it was minus 11 crores. So this is what the quarter I said. In this quarter they just made minus 11 crores. So that is because of the closure. So, and then in September 2020 it was around 257 crores. December 2020 it was around 240 crores. They were now almost doing 250 crores every quarter. So if we take that into account, they still maintain their OPM and they maintain their sales. So they were doing 250 crores every quarter. So if we extrapolate that, that will be 1000 crores for 1 year. So if you look at the year over year growth, so in March 2017 it was 800 crores, March 2018 it was 691 crores, March 2019 846 crores, and March 2020 it was 777 crores. So this year 2021 they will still do around 750 or so, because in June quarter they did not do much, it's minus 11. But then this year, if we just wait for one more year, so then next year if they can do 250 crores, then they will do 250 into 4, so that's around, as I said, 1000 crores profit they can make. So currently their market cap is sitting around 18,000 crores, and then they can easily do, not in financial 2021 but then financial 2022, they can easily do 1000 crores profit. And then their PE of 35 can come back, because it was cyclical and it was trading at around 15 or 20 because of the current crisis, and it was also cyclical, it came down. And also I believe it can go back to 35 PE for sure, because it's a market leader. And I think most of the people will buy back these shares, because already institutions are increasing the share. So I believe the PE can go back to 35. So with 1000 crores of profit, PE can reach 35, then it can easily reach 35,000 crores. Currently the stock is trading at around 18,000 crores, so it can easily double in 2 or 3 years. So it's also a very good buy at this point of time. That's all for today. Thank you for watching. One of the stocks I mentioned was investment advice. I'm not a financial advisor, so this is my personal opinion. You have to do your due diligence before investing in any stock. So thank you for watching, and if you like this video, like, share and comment. If you want to analyze any other company, please put that in the comment section. Thank you for watching and have a nice day. Bye bye.